Hello and welcome to One on One. My name is Funmi Unuajefe, and on today's episode, we'll be talking about embedded finance as a solution for non-financial businesses and the growing tech space in Nigeria. My guest today is referred to as a chief plumber. His name is Ope Adeoye, and he has spent over 17 years in the technology and payment ecosystem in various capacities, including engineering, leading high-performance product teams. Ope spent 11 years at InterSwitch Nigeria. In the process, created and led the creation of the QuickTeller product line and ran it as a business unit before handing it over, from strategy to product design and management to architecture, the entire works. Now he started his own Nigerian API fintech startup, OnePipe, and it recently raised $950,000 in pre-seed investment. He believes the world needs a new type of financial service ecosystem, one where everyone has a role to play and everyone has some value to capture. Thank you, Ope, for joining us today.
Thank you for having me.
Yeah. So tell us, what was growing up like? Were you, so I always like to ask this question, especially to the tech guys. Were you like a nerd growing up? What were you as a child?
Is there any nerd that will tell you that I was a nerd? So I think I wasn't one of those cool children. I wasn't cool in any way. I think I was a nerd.
Okay.
I think I was pretty reserved. Typically always at home.
You're still reserved now. It took a lot of talking to get you out. Yeah.
Yeah, so always reading a comic, always buried in fiction, usually. But I wouldn't say I was a tech child per se.
So now that you're in the financial space, is that something when we're all younger, we always had this thing, I want to be this and this. So you're reading comics and all of that. What did you want to be when you were younger, and then how you found yourself here?
Spider-Man. I wanted to be Nigeria Spider-Man.
Okay.
Yeah, I wanted to be Nigeria Spider-Man. Like every child, you want to be this, then you want to be that, then you want to be that. But there was one thing that, after a while, I was like, I think I would like to be an inventor. The picture I had in my head is a mad inventor in his basement, always creating something new. And then there's a world out there with the thing he creates. You can be watching them play with the thing from outside so that they don't. So that's sort of the picture I had in my head for what I want to be when I grow up. As things evolved, I thought the solution to that was, I'm going to become an electronics expert. I'm going to move to Japan. Then growing up was like Sharp and Sanyo. I'm going to move to Japan and become an electronics expert. Then because of that, I went to study electrical engineering. Then in the course of studying electrical engineering, I'm like, this thing is hard. I don't think this is going to work. Somewhere in the course of that, I picked up coding. And that's how I entered tech. But I wanted to be an inventor. I hope somehow I'm halfway in the course of that journey now. Maybe somehow I could be an inventor.
Interesting. So, the thing with tech, especially when you hear that people raise so much money, many people don't hear about the not so successful stories. So I want you to tell us about Twi Labs. Sure. What was it about? What happened and all?
Okay, so I was like, I'm going to start a company. It's time. So I've always planned to start a company, like as far back as I know. Even growing up, I told my parents when I was leaving school that I don't want to work for anybody. My mom convinced me that no, you need to start from somewhere. This thing, you don't just jump into it. So they start from somewhere, ended up becoming like 13 years of paid employment. But I'd always thought I would start something someday that would invent something. And my thought was, after spending quite some time in the corporate world, to start a lab that can produce products on the fly and turn those products into companies. Like that was the idea behind Twi Labs. Luckily for me, I had like a group of friends who understood that concept, who backed us with a little bit amount of capital to get started. But before we knew it, the money was finished. None of the product had taken roots. It didn't know they work, if I can put it like that. All the money had gone. My savings had gone with it. I'd moved from the house I was living to another one, taking my daughter from the school she was in to another one. My second daughter could not start school yet because, are you sure we can afford this thing now? So there was all of that going on. I put my wife's car on Uber. So there was quite a bit of that. And then, but all of this happened in the space of 1 year. Like this entire, from employed guy that thought it was all that, to this guy is just struggling and doesn't know what he's doing. All of it happened in like 1 year. Then it was at the end of that 1 year, we're like, let's do something different. Which of the things in these Twi Labs look like it is making sense? It was the thing then called PayPipe, like payment aggregation. Like, okay, can we reorganize it a little bit and call it One Pipe instead and turn it to a company, and let's just face it. It was a painful process. Like, Toy Labs were 24 people at some point. We had to let go of almost everybody.
Oh, wow.
And it was just 6 of us that crossed to continue the One Pipe journey out of that. So yes, it was a painful personal experience for me. I won't lie. It really was painful. I'm like, who sent you to do this thing? But
what are the lessons that you've learned from the failure of Toy Labs and you are using very effectively in One Pipe now?
To be honest, I would say the biggest lesson is that there are no failures, that there's only learning. And whatever you think is a failure, it's really just if your staying power can get past that phase. The thing you went through in that period is a contribution for you. Like, one of the things I took away from the Toy Labs experience was that I find that younger, hungry, driven people are an asset for you. Like, we are all trying to make this thing work. We don't know this thing, so we're trying to do it. So people with such a mindset are a significant asset versus people with a chip on their shoulder, at least depending on the stage that you are in. I took that lesson, and it's even part of the things that drive our hiring process at One Pipe now. Like, we need to check, like in every interview, we make sure that we ask the people, what do you really want from your life in 5 years? You have to articulate it as clearly as you want. You have to articulate it back to us, how we can help you do that before we even discuss your work at One Pipe. Like, what's important to you? Do you see us helping? Is there a line that we can find some kind of synergy? If yes, let's continue this interview. If not, it's been real. We shake hands, we move.
Yes, that's very interesting. Okay, so let's talk about, you've started this company, finding the right staff of people, because I know, like, the tech space, they poach your people like this. Somebody is dangling money somewhere. Somebody is, so you've gone through this process. This person has, pledged their loyalty and everything to you. But look, somebody's promising me ×5 of my salary. They'll move me abroad. They'll do all of that. How do you, you've talked about getting the right stuff, but how do you now keep this good talent that you have for your business?
If I tell you I know the answer, I am lying. Because if I know the answer, I shouldn't be running One Pipe. I should be running some kind of talent thing. But hard facts will be, since we started One Pipe, we're roughly 33 now, if I have the number correct. Up until December this year, only one person had ever left us. And
how many years has One Pipe existed for?
3 now.
3 years, okay.
Yeah. So while people talk about talent attrition, I think we don't have that problem, at least not yet. What is working, I think only time will tell. But I think part of what our team likes is this sense of openness, transparency. Like, I go to them, I'm a first-time CEO. Like, I don't know this thing. So if you ask me, 2 of us are looking at each other. So I think people appreciate that sense of candor.
Honesty, yeah.
They appreciate that sense of, I'm supporting this guy. Now, for me, that's like something to even be afraid of. Like, I always tell them, don't look up to me, I beg. Me too, I'm looking for who to look up to. Like, don't look up to me. But I think that kind of candor, that kind of, this is a real place where all real people helps people. And we even look each other in the eye and say, I know you're in the tech space. I know they are dangling carrots in front of the guy. My guy, feel free to explore. Just make sure that this our mission that we're pursuing together does not suffer. Like, I belong to several like tech groups where I'm like, this guy is on my team, but look at him in this channel doing this other gig. Like, it's fine. As long as there's a mission we're chasing, our mission is moving, and you need to support yourself with some other way or some other thing, please keep doing that. Let's just keep our mission going. And everyone is an equity holder in the company. So it feels like it's
fantastic.
our company. So no matter what you do, when you need more money, go find your more money somewhere. We don't have it here. But see, your long-term value is here. So let's just do it together. So a sense of mission, joint ownership, maybe. But time will tell if those are the right formula to.
Well done. I know it's not as easy as I've just made it sound so simple.
It's not simple.
Okay, so let's talk about embedded finance. Break it down to me as a layman, in the simplest of terms. What is embedded finance?
Okay, I'll use a very practical example if you don't mind. I ran into a company in Kenya that says we provide inputs to fish farmers.
Okay.
Now, this input costs a lot of money. The average fish farmer cannot afford the input. But you're looking at the guy's pond. I know that in 9 months, this pond is worth $50,000. You know that. But you need to supply feed of X value. You need to feed them every day of this value. And just doesn't have it. But in the meantime, you need to pay school fees. You need to pay transport, buy petrol. So this company provided those fish farmers that I'll be the one sending you your inputs, I'll be the one paying for the things you need in your life. But when your fish is done, I'm the one who collects it and I'm the one who sells it. Now, effectively, this company became the bank of the farmer. It's like, I will give you money every month. I will pay for all the things you need me to pay for. I'll give you a small bank account that your money is inside. I can use to do the things that matter to you. Be spending on me. But 9 months later, when your fish are ready, I'm going to harvest it and I'm going to go sell it and bring you back your small change.
Profit, yeah.
So embedded finance is an approach where non-finance companies can provide finance products to customers that they know in their own value chain usually, and as a way to be the bank of those people. And once you put it that way, it's like, if you put it in practical terms of how we all grew up, it's like cooperative bank when we were all coming up. The cooperative banks were usually small, in small communities, and they were like banks of the people. So the cooperative bank in my mother's area was for all the women in that area. The bank would provide credit to them, they deposit money in there, but it was like our bank. So we think that in the African context, there are so many value chains like that, that there's the room to create banking experiences that are localized to specific value chains like that. So embedded finance makes it possible for such organizers of such value chains to offer banking services without being the bank at the back. Because typically they will do a deal with the bank at the back and then sort of repackage the bank's products and present it to their own customers in their own name.
So is the Nigerian banking space, or should I say financial space, ready to take on this? How has it been, accepting it and, working with this process? How has the processes been?
It's hard work, first. Is the environment accepting it? I'll say the environment is not accepting it. So it's hard work. You need to do a lot of evangelizing, part of why we're having this conversation. You need to help people to come away from the biases or their understanding of how things are. Like, you need to convince a bank, for example, to say, banking is not people coming into your branch to open an account with your people so that you give them one card that they use somehow. That banking could actually be an arrangement between you and that aggregator of fish farming to go find 50 farmers to work with, and they will all carry the account of your bank. But you won't be able to control the actual last mile experience because that guy is handling it for you. So it's sort of, there's some evangelizing required, but so far we find out that people understand, especially when you look outside Africa. You're already seeing examples of this in other parts of the world. Like on Shopify merchants have a Shopify account, so to speak. On Square, you have your Square account. Walmart gives you a card. So people who have seen some of these things in other parts of the world are wondering, there should be an adaptation for this thing in Africa. So people get it, but typically what you need to do is to push people over the edge to appreciate and move in that direction. Interesting.
Okay, we'll take a short break and then we'll continue this conversation shortly. All right, we'll take a quick break, and when we come back, I'll still be talking to Ope Adeoye about embedded finance. Stay with us. Thank you for staying with us. My name is Funmi Unuajefe, and you're watching One on One. I have Ope Adeoye with me. So, what are the now you've talked about the banking institutions or the financial institutions accepting your platforms, but let's talk about the businesses. What challenges will it help the businesses? So we've used this example of the fish farmers, for example, and it's great that you use that example for me, because recently I spoke with like a couple of female fish farmers and all the challenges and all. So what is their own benefits? What challenges will embedded financing help them overcome?
Yeah, so imagine that you are the company that is doing this deal with these fish farmers. You likely have a larger company, maybe some hotel chain that you need to supply fish to, and it is competitive, and you know it, and you need to be able to supply high quality fish to them to serve to their own guests in whatever way, shape or form. So you already have your own problem, and you are struggling with getting supply for that. Now, by offering this financial product, so to speak, to those fish farmers, you can, to a large extent, guarantee the type of fish you will get. To a large extent, buy the loyalty of the farmer where possible. Buy the loyalty of the farmer to say, it will always come to me so that I can go sell. You can always sell for much higher margins. You are the one in Lagos or wherever it is you are. So the benefits to them usually are typically translated in the form of loyalty down the chain. In some cases where it is not, if I'm not using fish farming, for example, maybe retail, in some cases it is more efficient payment processing. We find cases where maybe retailers are supposed to pay to distributors, and the distributors always have to collect cash from the retailer and then look for how to dispose of that cash in the evening. Things like embedded finance eliminate those kind of problems for them. So it is loyalty, more efficient payment processing, and in some cases you can increase the basket size of the value between you and your customer because you offer them credits, as an example.
Okay, so now you've talked about evangelizing. What has been like the greatest challenge for you with, because it's almost like something that has apparently almost like never existed or is not very common in this space. So what particular challenges are you facing right now?
The biggest challenge is the challenge of saying, let's do it this way. That's really the biggest challenge. One of the things we always talk about at One Pipe, for example, is there are two philosophies in this world of embedded finance, or however you craft it. There are two philosophies. One is people already have bank accounts somewhere.
Yeah.
You need some way to reach into that bank account and do all the things you want to do. One philosophy. Another philosophy is, see that place where that money is. The effort required to reach into it, work out the process, create the best experience to see is so hard. Kuku just give them brand new types of accounts that you have this 100% access to upfront, so that you can now create these most seamless experiences possible. Two very divergent views on the same problem, right? We chose this other approach of let's create brand new accounts, let's list them with all the right properties at the beginning, and let's find the right customer set that needs that type of account. The hard part is having the conversation with a business customer who is telling you, I just want to process payment from the account in that other bank. And then you're saying, no, but how about this other way? So the hardest part is evangelizing that this other way has much more long-term value to a customer than what they think they know today. For some of us, it constrains the kind of customers we can have, because like my team will always say, let's talk to a customer, let's paint this long-term vision. If a customer can connect with that long-term vision, that's our ideal customer. Then let's go to how it can work. If a customer cannot and just says, no, I want bank statement or I want a debit. Good afternoon, sir. There's one company down the road that looks like what you are looking for. Please go talk to them. So that's been the hardest part. Evangelizing what people think is not a today's need and showing them that actually it could be today's need and carry long-term value for you.
But I think another challenge is, without trying to mention any big names, have you had people compare you and say, oh, so and so already do this?
Not today.
How are you different from this other person?
Yeah, it comes up a lot. And the answer we give is the same one I just gave you. So and so do it this way because they're trying to help you reach into existing accounts, which is what you really came to ask for. But hold on a minute, let me explain to you how it is more valuable to you to actually be the bank of your customer. This. Maybe 60% of the people will fall off when you say that. Like, no, I don't. Call me in 3 years' time when I'm ready for this time. Thank you, sir. Step aside. We'll move to the next person. So that comparison comes up a lot. But the answer is always, hold on a second. Let me walk you through what this world could look like in 5 years' time. Do you like it? Yes. Let's move forward. You don't like it? Go to so and so. They are nice people.
Yeah. Okay, fantastic. Now let's talk about the tech space. So every time I'm reading, all the tech blogs and everything of how you've raised money here, people have raised money here, and there's a huge amount of money. So is it really that easy for tech companies to, specifically to your own experience, how easy or difficult is it to raise money and get investors to believe in you that, look, I'm not selling moi here, this is a real deal?
This is a serious thing. Yeah. I'll answer that with a very vivid picture. We've raised funding twice, once in 2020 and 2021. So we raised 950, then we raised 3.5 million. And after each cycle...
$3.5 million or naira?
Dollars,
okay.
After each cycle, I personally fell sick.
Oh, wow.
Like, we finished fundraising. Where's Ope is sick? So, short answer is it's not easy. People fall sick after they raise money. But I think it gets better. So one of the things I'm learning personally is that in fundraising, you make a commitment. You talk to a lot of people and you make a commitment on what your company will do. Several will buy your promise and you take your first move. Then you come for your next funding round and you need to demonstrate that you see that promise I made the last time. We fulfilled it. Do you want to back us again? What you then find happen is that after your second, third, fourth round, it kind of gets easier as long as you are fulfilling the promise you made. And those who didn't back you at the beginning, when you were still like,
We'll come
you
back.
now be like, I missed that round. Okay, can we do it now? That's sort of where we are now. So it's not easy, but the way to do it is make a promise. A percentage of people will believe in you. Fulfill that promise. Go back to those who didn't believe and be like, are you sure you don't want to get on this train? That's sort of the formula.
Okay, so let's look at the tech space in Nigeria. It seems almost like it's just quantity over quality, and we don't have so many like unicorns, in Nigeria. What do we need to do? And the way I said like what does Nigeria and the tech space need to do so that we can grow or have our own unicorns?
While I'm not a finance expert, like I'm just a guy that presses laptop, so I cannot really give the proper answer to that. But I've heard people who know more than me say that this thing is just a timing thing. That Nigeria or Africa in general looks to be 5 years behind Far East Asia. So we are where Far East Asia was 5 years ago. So therefore, this thing is timing based, and some of the things that it takes off based on, like you see momentum now. As the momentum picks up, you start to see, one more unicorn, another unicorn, and even beyond unicorn. Like unicorns, to me, is one of those things you just throw around. But beyond the concept of unicorn, like where's the value being created? Where are the exits, for example? Are people really making money off this thing? When they make that money, do they plow it back into the market so that the thing can keep going? I think you start to see the effects of some of these things in the next 3 to 5 years. You will see founders, I haven't seen some of it now, you see founders who have managed to make some money off their company, backing other founders, right? And then those ones too will somehow push it through another 3 years, they'll back even more. So my view is that it's these things that create the momentum that we would like to see. And in about 5 years from now, Nigeria will look like what Far East Asia, or Africa will look like what Far East Asia looks like now.
Okay, so the tech space in Nigeria is really growing and it's fantastic. But some people have said, without trying to mention any big names or anything, is that I've grown this tech company, I've gone to get VCs from out of the company, and they're saying, look, you can't register this company in Nigeria. Let the shell be here and just be really large. But you have to come and register it in a foreign country and all of that. So how does that work? How does that eventually benefit? Because I almost feel like, does this defeat the whole African-owned, local-grown tech company idea? And how does it still benefit the economy?
To be fair, I think it's a give and take. If you cannot plow your own capital into your own society, and you find somebody looking to put in the capital in, you need to meet them in the middle, right? If the person says, well, your company needs to be in Delaware, then your company needs to be in Delaware so that you can get the capital you need. What you gain, that capital is now deployed in your country. You are employing people in your country. You are creating products for the fish farmers in your country, etc., etc. So while you may not be able to create the long-term value, at least from a capital appreciation perspective in your country, from the actual operating performance, it is happening in your country. You are pushing your country along, right? But maybe the long-term value of the company lies in another country. That's fine. It's give and take.
Okay, so on that note, we'll take another short break. Ope is still, I hope you're enjoying this conversation. It's a very, insightful and learning process for me. We'll take a quick break and then we'll be right back. Thank you for staying with us. I still have Ope Adeoye with me, and yes, we're talking finance, tech space, growing a business, and the entire works. So the African fintech ecosystem has the most attractive investors. That's attracted about 62% of 4.65 billion US dollars raised. Wow, interesting. I have to get into the tech space. I know it's work, but I want to make money. But why is this happening up there? How come the African tech space is so attractive to a lot of investors now?
Yeah, my view is Africa has significant infrastructure deficits, step one. Whether you think of infrastructure in terms of people, whether you think of it in terms of road and rail, or you think of it in terms of financial infrastructure or credit infrastructure, we just have problem full everywhere. So where there's problem lies opportunity.
Solutions, yeah.
And then if you look at, say, the Western markets, the return on capital is not as high as it used to be, etc., etc. So if you are somebody who has a lot of money and you're in the US or UK, and you're looking for how to turn this money around, okay, invest it in a place where there's problem. Of course, you lose some of that money. But when you do solve those problems, your money goes like this. So I think that's why the African tech market is attracting funding, because maybe tech companies are trying to solve some of these infrastructure problems, and fintech in general is a bit easier to solve than the more physical infrastructure problem. So capital will naturally follow where it thinks it to get its money back.
Okay, interesting. So what advice do you have for key players in industry, finance space, in fact, the entire tech space? What advice concerning, succeeding? And that's why it was very essential for me that you shared your 2i lab story. People have done, and a lot of people come out for funding and we hear success story, but there are a lot of people at the back end who are still trying to, work off. What advice do you have for these people?
First off, don't take my advice. That's the best advice I can give you. Even me, I'm looking for advice. So I will not say I have advice. I will only say that one of the things that at least I personally believe in is collaboration. Like, what can you do? What can I do? How can my 1 + 1 become 3? How can my 1 + your own 1 become 3? Like, we should always all be looking for ways to do that. I know it's not easy, especially when we all get funded. We think we can do it.
Yeah, but people are worried. Sorry, I have to interrupt you with that. Some people are worried that we should collaborate. What if this Lagbaja goes take my idea and runs up with it and everything?
What are they using it for? Idea is nothing. It's the coming together to actually make the idea executable that actually carries value. Like, what is idea? Come and take idea. It's all over the place. I don't think idea is the problem. I think it's just a willingness to say, I'm good at, I don't know, knitting. You are good at selling knitting. Please, can we come together and create sweater and sell it? Bam. Not, I'm going to learn how to make sweater. I'm going to learn how to sell sweater so that I can give it all to myself. There's really no point. Don't tight your chest. Yeah.
Interesting. So what's this writing challenge you just put up?
Okay, so back to like how you mentioned that what are the things we're putting effort into right now around evangelizing this concept in general. So our thought was that with this writing challenge, we will get people who are better at writing, better at research, to do the research around the concept of embedded finance and write openly about it. When the writings get published, we then pay winnings to the best write-ups. We have a panel of judges that's going to review all of the submissions, and then the best published articles get paid good prizes, I believe.
Okay, thank you, Ope, for sharing your story. We hope as you get bigger and you raise more money, I won't have to remember me now. I won't have to be chasing you around.
Save the number.
I'd be like, oh, for me, I'm somewhere in London right now, I'm too busy. But thank you so much for your time. Even I, really, you've just made it, because at first, before I did this interview, it seemed all very gibberish and complex. I was telling my colleague and telling you earlier of how I was really studying like I was reading an exam, because I was like, I want to understand this financial thing. But it really has been a good conversation. Thank you for your time.
Thank you for having me.
All right. And that's all we can take today on this episode for One-on-One. Follow us on all our social media platforms, on Facebook, on Twitter, on Instagram. And I'll see you again very soon. My name is Funmi Unuajefe. Enjoy the rest of your day.